On Tuesday, August 1st, news broke of the Fitch Rating agency's downgrading of U.S. Treasury debt in response to massive deficits accumulated in recent years. Now, this action mirrors the move of the S&P Global Ratings Agency, which downgraded the debt back in 2011 and has never moved back the rating. Now, Bitcoin jumped almost 2.5% on the news to partially reverse some of its recent weakness. Now, the situation is really interesting in that last time the U.S. received a downgrade, the eventual market move was a flow of money into the dollar and into U.S. Treasuries. Now, the initial move on Tuesday was somewhat similar in that the dollar actually rallied. Now, the paradox here is that the rating agency's message is that U.S. debt is not as safe as it once was due to expected fiscal deterioration in coming years. In other words, they are concerned that the currency could potentially weaken due to profligate spending and printing, and the market's reaction was to buy the dollar because of the possible broad market volatility. The question is, where does Bitcoin fit into this equation? Now, the initial move higher in Bitcoin made sense if you believe, like many Bitcoin enthusiasts, that the coin is a hedge against weak U.S. dollar policies. Now, but there's also a school of thought that the agency's actions may push the U.S. government to adopting policies to protect the currency. Now, a reminder, the CME Group now offers options on both micro Bitcoin and micro Ether futures, but we're going to be using the micro futures for these examples. If a trader believes that Bitcoin could rally from here, they could express that by buying the August micro Bitcoin futures contract at 29,500 and target a move to the mid-July highs of 31,500. Now, a stop for this trade could be placed below at 27,900. This trade could make $200 if the target is reached and risks $160 if you're stopped out of your level. If a trader believes that Bitcoin could soon resume its weakness, they could express that by selling the August micro Bitcoin futures contract at 29,500 and targeting a move back to the June lows of 24,500. A stop for this trade could be placed above at 33,500. Now, this trade can make $500 if the target is reached and risks $400 if you're stopped out of your level.